Hey everyone, John here, and today in the market psychology video, we're going to be taking a look at crude oil. Man, I hope everyone wore their hard hats. We have a heck of a bullish day on our hands here. Yesterday wasn't so much the case, right? Now, yesterday was inventories, but that did form a nice topping wedge area that we gapped above. Connecting these two tops through here, we gapped above that area and showed initial support coming off of it. Now, that doesn't necessarily mean we need to be buyers immediately on the open. We need to see what the reaction is again. Buyers couldn't continue back through. That's a little bit of a red flag. That's not really what I want to see. That may just be an opening reversal to drive down to fill the gap. Sellers come in and they get a pretty heavy bearish candle. That's a very nice looking bear candle to sell underneath, but it couldn't even trigger underneath that candle before turning right back up again, showing us that this is going to be seen as a breakout pullback on this area of support, once resistance turned support. So that allows us to become aggressively long, buying into the move, knowing that the upside potential is quite a bit higher now. We have a lot of distance potentially to the upside that we can see the buyers try to drive the market up. Beautiful run off of that initial entry point there, driving up into an area of resistance where we saw a little bit of pausing. Bears tried coming in again, only to be immediately taken back by and actually even engulfed by the buyers, showing once again that the sellers have absolutely no bias in this market. We need to be buyers only. And now we're starting to get big clues that not only do we need to be buyers only, we're starting to get a semblance of a rotational bull day, meaning that it's so aggressively bullish, you don't look to do anything but buy. And you're pretty much buying for any reason you can get your hands on because of how aggressively bullish this is. Now, this big run higher here allowed us to get into a small little pullback. They pulled back off that level, bounced right back up. Gorgeous run right back through the highs once again. We have a small little two-legged correction, but notice where they went right back to that area of support once resistance turns support. Deja vu, right? We find a lot of support coming off of that area. Beautiful bull bar as well, buying above that to drive the market back up towards the highs again. We push into the highs with a lot of aggression. We close beyond the swing highs. We're continuing that upward momentum. Likely a bull channel now working its way higher too. Everything is pointing to the upside still. The sellers try to come back in, but all they manage to do is form a very tiny little bear candle. And the very next candle is a even smaller bull candle. Now, the reason I have this one marked is because, remember, we are in a super aggressively bullish day. And if you're going to be buying above a candle and let's say your stop goes underneath it, this is a beautiful risk reward, right? Your entry and your stop. This is your entry and stop. It's very easy to get 2-to-1 targets when you're only risking, 5-6 ticks. You can go for 15 or 20 ticks and still be perfectly fine. So a lot of buyers on this type of day will look at that candle and say, you know what, that's worth the risk. Even if I'm wrong, I'm only giving back 5 ticks. If I'm right, I make 3-4 times that. So it's a perfectly good example of a risk reward type trade, taking into account the type of day. Buyers slam higher after that. They try to pull back, got a little bit choppy inside there. We go from a weak bear candle into a engulfing weak bear candle, and the buyers step right back in. So essentially, we've gone where we formed a range, the range widened out, the range tightened up again, right? You can think of it as kind of like a spring that tried breaking and then coiled right back up. And a lot of times in this type of environment, guess where it's going to break? When it finally lets loose, it's probably going to spring back up through the highs, at least to the high of day, if not a little bit further. So when we get that nice bullish confirmation right there, that is another beautiful reason to follow it up with more buying pressure. Just a phenomenally bullish type of day. You only get these types of days maybe once a quarter. So it takes a lot of not necessarily just sticking with the trend, but you have to respect this kind of day. This is the kind of day where you do not even consider going against the trend. If there's a pullback, I don't care if it's a really deep pullback. You're still looking to buy it because that's the type of aggression that we're expecting on this type of day. Just a phenomenal example of that. So that's going to do it for me. Nice combination of technical analysis and market psychology. Hopefully you found it interesting, you learned something, and we'll see you next time.